I wanted to, perfect. I wanted to talk to you guys about what it is to be a beginning farmer. I wanted to talk to you about what it entails and really all the things that FSA can do. I don't have a program tech with me today or a county executive director, but those are going to be the ones that are really, really informed on some of the benefits of the programs that we can take advantage of. I'm really mainly focused on the loan stuff. So if you have loan questions, throw them at me and don't be shy. You can ask me anything you got. We're used to unique and different situations, and honestly, those are my favorite things. But when it comes down to some of the specifics on programs, I'm going to be at a little bit of a loss. But I can always get you connected to somebody in your local office that can get those questions answered for you. So with that, I think I'm going to kick it off, and we're going to talk about what it takes to be a beginning farmer and rancher and kind of what the USDA sees as a beginning farmer and rancher. And again, I'm with the Farm Service Agency. I'm a farm loan officer out of the Malheur County in Oregon here. So bear with me. If anything goes out internet-wise, we'll get back connected and start it out again. But so when we talk about beginning farmer and ranchers, a lot of the times somebody that's brand new and has never done it before considers themselves a brand new, a beginning farmer and rancher. In certain facets, that's true. Somebody who's new to farming, new to ranching is a beginning farmer. But there's certain assistance programs and loan programs that take a few more steps to really take advantage of. So we can help you with crop insurance, we can help you with conservation programs, disaster assistance. There's a whole mess of things that we can help you with, but there's a few steps that you need to take before we get to that point. So when we look at a beginning farmer and rancher through the FSI scope, it's somebody who's not operated a farm or ranch for more than 10 years. And to meet the loan requirement eligibilities for like an FO, they don't own a farm that's greater than 30% of the average farm in that county. So for Malheur County, we've got a lot of ground and a lot of folks that own bigger parcels. So the average size of a farm in Malheur County is around 1,000 acres. So if you own more than 300, you're not going to be a beginning farmer rancher. So for FSA, this is really what we're looking at to focus on when we're talking about beginning farmers and ranchers. The definitions vary between the agencies, and that's the truth. Some of them don't take this into consideration, but for FSA, this is something you want to note. If you own 10,000 acres, but you've only been farming for 3 years, unfortunately, unless there's, a huge amount of acreage that people in your county own, it's going to be a little bit of a different conversation when we talk farm loans and programs. So another part of this is we service socially disadvantaged and historically underserved populations. And a lot of times that's what we see when we see folks coming in asking about beginning farmer and rancher loans. So just so you know, it's important to indicate whether or not you're part of one of these groups, because it gives you certain advantages in the programs as well. And beyond being socially disadvantaged or historically underserved, we also deal with veteran farmers and ranchers and give them certain benefits when they come in and ask for program assistance or loan assistance from us. So make sure to be candid. Let us know everything about you. We are the federal government, but we're not stealing information or sharing it with anybody else. We're just using it for your benefit. So again, on the veteran side, there is that definition of a farmer that falls under a beginning farmer and rancher, even if you are a veteran, and it's somebody who hasn't operated a farm for more than 10 years. So just keep that in mind. A big part of this too, because I know that when we start to talk about, what is the eligibility criteria for each and every one of these, sects of farmers, a lot of this is going to come down to a conversation with your county office. You can always talk to me, but when it comes down to it, the county office that you deal with is going to be the one making the decision. So it's always a good idea to go down there, schedule a meeting, and have a real nice conversation, a good candid conversation with them. Putting a face to the name is always nice. And I'll turn my camera on here in a bit so you can see mine. but I do recommend you schedule an appointment, sit down with your county office and talk to them about how to get the most out of what we offer. So again, we're going to push it again. You always want to connect with me. I love to help people. Your local office likes to help you, and really to get the most information about what's happening, because we have programs changing all the time. You're going to want to sit down, connect with your beginning farm and rancher coordinator, whether that be me or somebody's here from another state. Online, all that information is available. We also have a tool that'll let you see where your local service center is. So don't be shy. Look it up. I've got links here. I'll post it after my presentation. It's all done. But it's really a big important piece of sitting down, having a conversation with that local office, with me, with, maybe it's a friend that you know of, but really the best information you're going to get is with your local office. So by all means, use that tool to find where that office is, sit down with them and have a good conversation. Some of the things that you're going to want to bring is a proof of ID, driver's license, social security card number, something like that, and an idea of any land that you own, as in a deed, bring a survey plat, any kind of rental or lease agreements that you have, because those are the tools that FSA uses to assign you ground. So that sounds weird if you're outside of FSA, but what we do, and again, I'm just going to jump over this slide because I think everybody's got a good idea. But what we do is we enroll your farm with a farm number, and we assign that number to a producer. So we're aligning who's farming where and who can really take advantage of the programs that we have to offer. So once you get that farm number, it's essential to have that to work with NRCS. I'll have Anna talk to this later on. She's our champion for the risk management agency, but having that farm number assigns you to a piece of ground and gives you a little bit more access, not a little bit, a lot more access to the programs and things that we offer. It also helps us when we're doing farm loans by saying, okay, here's the ground that you have. This is how many acres we can deal with. And it gives us a little more information if we're trying to do a loan or chalk up some projections. So if you guys have any questions about this afterwards, we're all going to have breakout sessions. So FSA, RMA, and NRCS will be in a room. Feel free to jump in and talk to us about any kind of questions you have on this. So let's talk programs. Acreage reporting is fundamental to what we do. If I don't know what you're growing, I don't know what I can help you with program-wise. So when you come in with your farm number, what the PTs and the CEDs are going to be asking is, what are you growing? When did you plant it? And you might think, well, that's none of their business. But what we do with that information is get you eligible for programs. So don't be shy. They're not sharing this information with anybody else. It's not public. It is information that FSA uses to get you eligible for programs and to get you in the know about programs. And some of the programs that they offer is NAP, which is a non-insured crop disaster assistance program. So in Malheur County specifically, it's weird and it changes from year to year, but there's certain crops that aren't insured. So if you grow grass hay in Malheur County, I'm pretty sure that you can't get that insured. But if you grow alfalfa hay in Malheur County, you can get that insured. Now, if you go to Harney County in Oregon, same state, it's a county right next door, the opposite is true. So what we do is we use the the finances of the federal government to help cover farmers in instances of disaster. One of the cool things about a beginning farmer signing up for these programs is NAP has an application fee, but as a beginning farmer, you don't have to pay that. Now, it also is the same thing for disadvantaged groups and veterans and stuff. But that's where it really comes down to sitting down and saying, hey, this is what I am, this is what I've done, what can we do together? Some of the things we can do is we have an emergency assistance for livestock program. We can help with honeybees. We can help with farm-raised fish. That's not really something I deal with a lot in Malheur County, believe it or not. But on the coast, that can be something that you can really take advantage of. A big program that we use in my side of the state is LIP, or the Livestock Indemnity Program, and LFP, the Livestock Forage Program. When you got to start delivering feed to your animals in a situation where you never would have before, or you have animals dying due to inclement weather and some extreme events, these programs come and help you out. They're not going to make you rich. That's the truth. But these aren't programs to help you be sick. They're not programs to help you get rich. They're programs to help keep you on the farm and help make you successful, even if that's not tomorrow. It might be, tomorrow after next day. Another cool program that we have in Oregon, the farm loan folks deal with this, is the Farm Storage Facility Loan Program. And what that does is we use finances from the CCC, or the Credit Commodity Corporation, to help you build farm storage facilities. So in the case of somebody who's producing hay, again, we do that a lot out here. I can help you build a barn to put that alfalfa, that grass hay, whatever it may be, underneath a shed, instead of having to tarp it and let it be subject to the weather or whatever it may be out there. There's a lot of things that go into an FSFL. So if you're interested in that, absolutely jump into my breakout session when we're done here, and we'll talk more about it. Again, there's a lot that goes into an FSFL. So as much as we talk, you're going to want to talk to your county office and get informed on what you'll need to be eligible and to have an informed decision on that. So by all means, jump into my breakout session. We'll talk more about FSFLs. I love those. Again, what we offer on a basic level is two things: farm programs and farm loans. So I'm big on the farm loans, and I'm just going to harp those to death when we get to that part. But on the farm loan side, we can do ownership loans. So I can help you buy property for a farming purpose to grow, enhance, or start your farming endeavors. I can help you operate. So I can help you buy cattle. I can help you buy equipment, machinery, and I can also help you operate on an annual basis. There's a lot that goes into what an annual loan is versus what a term loan is. So if you have questions on that, I have a little bit more information, but jump into the breakout session, ask me specifics, and I'm more than happy to answer what I can. We also have a program here through banks that's specifically geared at getting folks that aren't normally bankable to that point, and it's called the Loan Guarantee Program. It's not something I can apply for you. It's not something you can apply for. It's something a bank utilizes to get you from not being bankable to being bankable. It's kind of a protection for them. It's something you'll want to talk to your local lender about, but I can give you kind of what we go off of on the FSA side, so you can have a more informed decision with your banker if that's something that interests you as well. And again, we've talked about this a little bit, but on the program side, we do disaster assistance. We work with conservation programs, and a lot of that comes through NRCS, but FSA does a little bit of that as well. We work with safety net programs and risk management. So that's where those LFP, LIP, livestock indemnity, livestock forage programs come in to help you save yourself from things that can be a detriment to your farm and ruin it. Having animals die, having, to haul feed to the point to where you're broke. So if you have any questions about that, jump into our breakout session again. I'll stop saying that here in a minute, I'm sure, but we'll talk about where your local office is and who you can have a really good educated conversation about with. Oops, I skipped a slide. So one of the things about FSA is, as a federal entity, we're not a bank. There's a lot of folks that come in and say, well, I've got this, I've got $10,000 here. I don't really want to use it. I want to use your guys' $10,000 to operate on or buy machinery or equipment. And that's really not what we do. It's not something I've talked about before as much as I should have. And really, I should change this. As FSA, we don't refer to it as supervised credit. It's progressive lending. What FSA is designed to do is to get you from a point of not being bankable to a point of being bankable and successful in your own right. So opportunity, and the term we like to use, FSA is the lender of first opportunity and last resort. So when a bank won't take you because you've never done it before, That's where FSA steps in and helps you be successful. Or when you get to a point where a bank won't take you because you're unbankable, in that right, it could be, you don't have enough security, you don't have the cash flow to make the bank basically give you the loan. That's where FSA steps in and helps. So some things that you need to be aware of is you need to not be able to obtain credit elsewhere. And that credit can come from you too. I'm not talking about the retirement accounts you have sitting around or any long-term investments that you may have. Well, I'm not asking you to liquidate those, but you do need to be aware that when you walk in and let's say you have 10,000 bucks in cash and you ask me for 10,000 bucks in cash, the question is, why don't you use your money? Because the funds that I have available are for folks that don't have the $10,000 in cash and need it to operate. They need it to be successful. Another thing too is you need to have an acceptable credit history. So oftentimes people come in and they're unbankable because they missed some credit card payments, they've missed this payment, they're in bankruptcy. There's a number of things that can happen in our lives, right? And there's nothing wrong with that. But for FSA, for FSA to get you approved for a loan, you have to have an acceptable credit history. There's a few things that we can discuss, like if there was a life-changing event. Let's say, you got into an accident, you weren't able to pay your bills on time. There's a few things that we can explain, but when it comes habitual, there's a few things that we need to get done before we can get you eligible for those farm loans again. So just be aware. We are a bank in the sense that we lend you money, but we're not a bank in the sense that we lend everybody money. There's really specific folks that we're gearing towards. The last thing I'll note here too is you got to be the owner operator or the tenant operator of a family farm. And what that means is if you buy land through FSA, they don't want to see you rent it out and not operate it. I want you to be on the farm. I want you to plant the seeds. I want you to sow the seeds. I want you to harvest. I want you to go through it and act as an owner operator. And if you have any questions on that, join me. We'll talk more about it. I know that can be a little bit opaque when we talk about being an owner operator and what that entails. So again, operating loans, this is my jam. This is what I love. This is what I do every day. And what you can use an operating loan is to purchase equipment, livestock. You can use it to fund your production expenses, and you can refinance operating expenses to help you get to a more manageable debt load. There's a lot that goes into refinancing. So if you have questions on that, join me. We'll talk more about specifics. But operating loans can be repaid in a 1 to 7 year period. It really depends on certain margins and ratios that we use internally. But a 1 year note would be for annual expenses. So these production expenses oftentimes are going to be on a 12-month note. Equipment oftentimes is going to be on a 7-year note, and we don't really reduce those. They're pretty hard and fast. There could be situations where your payment ability from the ratios that we use shows that you could do it in a lesser amount of time and that it'd be more beneficial to you for us to do that. And we may do that, but oftentimes I see that, especially on equipment and livestock purchases, we do 7-year term loans. The limit on that's $400,000. And there's also a history requirement that's involved here. I don't have a note on this, but one of the things about getting a direct operating loan is I need you to show that you have 1 year successfully operating a farm, whether that be with the FSA through successfully repaying a youth loan or using the microloan program, which I'll talk about here in just a minute. But I got to see a year of history. Oftentimes, how we get that documentation or how we prove it, because the proof is always in the pudding. FSA, as I like to say, is a trust but verify kind of organization, is through a Schedule F. So in your taxes, there's a profit and loss form that you fill out for farming operations. We use that to qualify you essentially for that 1 year history. We can also use education. If you're a veteran, we can use that as your 1 year history, and we can use substantial management experience in the frame that if you've operated a farm as if you were the owner operator. So if you managed a farm as, let's say, the operations manager. And you went through, you signed checks to sell the hay, you made all the irrigation schedules, you bought all the things that you needed to fix the things on the farm, you acted essentially as the owner operator, that would count as a year of history, and we can get you eligible for this. Another thing we can do, and really the most popular thing that I get asked about, and one of the more difficult loans to get, is a farm ownership loan. So we can buy land, we can improve on your capital, so we can go through, we can help you buy, build a barn, build fences, put in certain irrigation things. We can help you do soil and water conservation projects, which we'll talk about here in a bit. And we can also fund those loan closing and related expenses. So when you close a loan, you're going to have insurance costs and a few other things. We can help fund those with this money. But there is one big thing that oftentimes holds back beginning farmers in this faucet, and it's a 3-year history requirement. You got to have 3 years of qualifying experience before I can get you eligible for a farm ownership loan. And it can be a mixture of going to school, getting a degree in production management, any kind of ag courses up to 16 credits. I can count that for a year, having that substantial management experience. But a lot of times, I need you to have at least 1 year of production experience to get you eligible for this. I need you to operate a farm, have rented some land, or done something in that faucet to get you eligible for this. Now, this is through policy, and this is new. It's not something that I've seen a lot of, but we do have a relationship with SCORE, which is the Society Corps of Retired Engineers retired executives, where they will mentor you and help you through this program, and that also counts as your experience too. It's not something I've seen a lot of, but it is something that we could use to substitute out that 3rd year and get you a farm ownership loan. But a lot of that conversation is going to come down with you communicating with your local office as to what you've done, what you want to do, and how you're going to get there. The limit on this is $600,000, and I know a lot of people look at that and like, well, what's the point? This can be used to joint finance purchases as well. So I could go through and fund $600,000 of a $1.2 million property, and we just need a bank to come up with the other $600,000, or we can do owner finance as well. There's a lot of creative things that we can do to push this limit to as much as possible. But again, that comes down to talking to your county office, your loan officers, and seeing what's available to you and what makes sense for you. The last thing that I want to do, and that any farm loan officer wants to do, is give you this loan, and next year we have to foreclose on it. We want to make sure that when we set you up with especially a farm ownership loan, it's something that you're going to be successful with, and that you're going to continue on for the life of the loan, and hopefully way long after that. We're trying to set up generations of successful farming. Farm ownership loans can be repaid up to 40 years, but a lot of times the terms I'm seeing is 30 years. We have some internal metrics as to how many years that we can approve a loan at. But again, talk to your county office, get some projections together, and you can have a better educated conversation on what that would look like from you. Now, the biggest holdback, again, like I said before, on getting a farm ownership loan is that 1 year history. Because you got to have that at least to qualify for an operating loan, farm ownership loan, any of this. So one cool thing, one of my favorite things, is a microloan. I love youth loans. I think those are fantastic. And again, youth loans are available for anybody who's under the age of 18. I think it goes up to 20, but anybody who's under the age of 20 that is working through a local organization like FFA or 4-H. There's a lot of rules that go into a youth loan. But what I'm seeing for beginning farmers now, especially folks that are over the age of 18 and that want to start a farm, is using a microloan to get that foot in the door. So what we can do with a microloan is we can get you $50,000 to operate or to buy equipment and start out a cattle operation, or buy that fund that basic security you need to start to grow an operation. And for a microloan, you don't need any history. All I need, if you don't have any history, is to see that you have a mentor. So if somebody's doing what you're asking us to do, let's say dad's been ranching for years. He's been ranching his whole life, and you'd like to start out a little operation and run cattle with him. One thing we can do is we can get you set up with a microloan to start to buy cows and operate on. Now, a microloan is limited to 50,000, so I could give you 20,000 bucks to operate on, and then the rest of that 50,000, $30,000 to buy cattle and run with dad or whoever else it is. One of the most popular things I see, especially out here in Malheur County, for folks that are looking to start an operation, is they leverage who they work for. So they have some management experience through, I work with XYZ Cattle Corp, and they said I can run 20 cows. So we get them a loan to buy 20 cows. We get them some money to operate on because they got to buy feed. They're going to have to buy, there's going to be vet bills. There's going to be other kind of bills. And that's really how I see this being used. We also have the ability to use this for farm ownership loans. And we go up to 25 years. This one's a little bit different. It's a good opportunity for buying a small piece of ground and doing, microgreens or some kind of unique, smaller scale operation. Of course, nowadays, one of the things is it's difficult to find a piece of land that's 50,000 bucks or less, but there's that opportunity as well. Again, a farm ownership loan can be used for improvements. So if you need to build some fences or to build a shed or to do this or do that, it's definitely something you want to talk to your local officer about and see if it's a possibility. But I love microloans. I think they're a great way to get that history and really remove that barrier to getting a full operating loan or a full farm ownership loan if that's what you're wanting to do. So I said I'd talk about guaranteed loans. Guaranteed loans are, again, a different animal. It's going to be something that you talk to your local bank about. It'll be, what is it? Ag West. It used to be Northwest Farm Credit Services, but now it's Ag West. In Ontario, Oregon is where I live. We work a lot through Columbia, which is now Umpqua, or First Third Security. There's a lot of agricultural lenders in this area, but wherever you're at, you'll have a specific ag lender in that area that really does farm loans. Again, Ag West is great. I love Ag West. They have a lot of programs for beginning farmers, just like FSA, and we can use those to piggyback on each other. Another thing too is like the Oregon Department of Ag has grants available for you guys where FSA doesn't. So when you're looking at this and you're talking to your lender, make sure you talk to whoever it be, if it's the FSA, or if it's Ag West, or if it's another local lender that does ag loans, talk to them about some of the opportunities that other organizations can have for you to get you started and to help make some of this cheaper and more feasible to happen. But when you're talking to a lender, what they do when it comes to ag loans, and again, for an ag loan, we can go up to 2.37 million. So these are bigger loans. It's essentially taking some of the requirements that an ag loan has and lessening for you, because we have FSA behind it saying, if they fail, we'll pay up to X%. So for a regular farmer, we can guarantee loans up to 90%, but for a beginning farmer, we can go up to 95%. So this is something that can really sweeten the deal for ag lenders and get them closer to a yes and get you a bigger purchase price. Again, these aren't something that I can apply for. This isn't something you can apply for. It's something the bank makes internally as a decision to say, we're going to get this loan guaranteed, just to sweeten the deal and make that approval more of a possibility. So if you have any questions on that, jump in, and I can answer as much as possible, but it really is more of a guaranteed lender's decision on whether or not they do this. But it's always good to go into a conversation educated. On the FO side, another opportunity that we have is a down payment loan. So these are a little bit different too. You got to be a beginning farmer, veteran or SDA farmer, and you got to provide 5% of the down payment. So if the property is, $1 million, I gotta have you provide that, it'd be 50,000 bucks down. But for folks that have funds, somebody who, wanted to buy land but doesn't want to use their money, when they come to understand how we operate, this is a great opportunity. I know the down payment loan rates right now are about 2.5%. So when it comes to being competitive and getting a good rate, this is a great way to go, especially if you have the finances to do it. I can finance up to 45% of the purchase price, or a maximum of 300,150. Now, for each and every office in different states, you're going to interpret this a little bit different. So that 300,150 could be for $1 million purchase. It really, again, comes down to you talking to your local office and seeing what they do and how they handle these. But it's a great opportunity for somebody that's coming out, has some finances, was able to save some money, and wants to buy a loan or wants to buy some land with a really, really good rate. Always worth a conversation with your local office to see if this is something that you guys can take advantage. Now I'm going to give a shout out. Unfortunately, RD wasn't here, and there's a number of other agencies that work under the USDA umbrella. RD's not here, but for folks that aren't doing specifically ag things, one thing you can take advantage of is jumping in with RD and using their value-added producer grants. Talking to them about getting financing through the SBA or getting some guided assistance on getting financing for your small businesses. I'm not going to talk too much about this because if I do, I'd probably end up lying to you, and that's the last thing I want to do. But if you have questions on RD, get with me at the end of this, or send me an email. I have my contact information up here in a second, and we can talk about getting you connected with my RD contact and the champion out there that knows way more than I ever do. Another group of folks under the USDA umbrella that is worth a shout out is Agricultural Marketing Services. They have data on organic programs, on commodity procurement, how to get what you're trying to grow, and local food grants that you can use to really forward that search into being successful and how to make a farm work. Again, I won't talk too much about this because, again, I don't want to lie to you, but reach out to me if you're interested in talking to them about some of the benefits they have, and we can go from there. The last thing before I jump off here and let the risk management agency take over, and I'm sorry for taking too much time. I probably took too much, but don't be afraid to reach out to your local extension office and some of these other groups that really help beginning and young farmers. If you don't take opportunities from each and every faucet that's available to you, you're going to miss out. One thing that I want to give a shout out is the Oregon Department of Ag is great about getting new and beginning farmers grants for down payments. So if you have that grant, it's something I can consider in my loan analysis. So it makes getting a farm ownership loan, if you have that history, that much more feasible, that much more possible, and get you closer to doing that. Another thing too is that we have a county committee, and what's cool about the county committee is everybody's allowed to nominate somebody for the county committee. You got to be a producer, but it also gives you access to a few folks that operate and produce in the area. They might have some really good information for you. They could become mentors, and it's just good to network with people that have been doing what you're asking to do or been doing something similar to find out, where are the hiccups, what's something I should look out for, and where's the real opportunity here. So with that, I'm gonna shut up. I think I have a few questions here in the chat. Let me take a peek. But here's my contact information. I just put down my email address and my phone number. I'm working on a detail right now, so I'll level with everybody. I'm trying to get back to everybody that gives me a call as soon as I can. It might take me a little bit of time, but reach out to my champions as well. Reach out to your local offices. They'll be a lot quicker to get back to you, and they know a ton of stuff about what we're doing and how to work better with what you're asking us to do. So I see Nate here asked about specific SCORE mentors. SCORE is a program outside of FSA and the USDA. And they have specific mentors for specific things, but it's something that you'll want to work with SCORE to get down to a science. They'll be able to direct you better there. And you can just go to, I think it's score.com, I believe. You can Google SCORE and it'll bring up that mentorship and more details on it.
Hey, Derek, I did address most of the questions if we want to jump to Anastasia.
Oh, perfect. Okay, then I will shut up. I love it. Thank you guys for the time. If you have any questions, join me in the breakout session. And with that, I will go ahead and we'll jump to Anna. I'm going to stop sharing my screen just for a second here so I can pull up your presentation.
And while you're doing that, I just wanted to make sure, can everyone hear me okay?
I can.
Okay, perfect. Well, thank you very much, Derek. That was a lot of really great information. So real quick, before I get started, just as a little bit of an introduction, my name is Anastasia Griffin, and I have been working with the United States Department of Agriculture Risk Management Agency for about 9 years now. So I'm also actually a veteran, an Army veteran. So I did that before working with USDA. So that's a little bit of my background. So with that, I'm just going to go ahead and get started here with the Risk Management Agency's programs. Before I begin, though, I'd like to just really quickly go over our disclaimer with you. So the purpose of the following material is to promote awareness of risk management concepts and to highlight USDA's risk management products, features, benefits, and availability. This material does not change the content or the meaning of current policy provisions, filed actuarial documents, or approved procedures. Next slide. RMA's vision is to secure the future of agriculture by providing world-class risk management tools to rural America. Next slide. Again, I am with the USDA Risk Management Agency's Spokane Regional Office, and we administer the federal crop insurance programs in Alaska, Idaho, Oregon, and Washington. We also provide outreach to help farmers with risk management tools. With that being said, I just wanted to let everyone know I have been working with the BFRs. I started in 2019 in Idaho as the RMA champion in Idaho, and I have since become the RMA champion in Oregon, Washington, and Alaska. So, next slide. So RMA is responsible for developing and maintaining federal crop insurance policies. This includes determining the rates, prices, yields for each crop at the county level every year. RMA is also in charge of compliance to prevent fraud or abuse. Private insurance companies and agents are responsible for selling insurance policies to farmers and settling their claims. The federal government subsidizes the premiums to reduce the cost of crop insurance for farmers and reinsures the private insurance companies to share the cost of the claims. Next slide. Federal crop insurance provides protection from production loss, price decline, or a combination of both for individual commodities. There are production and revenue plans of insurance which are based on a farmer's actual production history. Area plans of insurance that are based on averages in an area, like by county. The Farm Service Agency, or FSA, also has a non-insured crop disaster assistance program, known as NAP, that is available in counties where RMA crop insurance might not be available for a particular crop. So the Farm Service Agency's NAP coverage provides that financial assistance to producers of non-insurable crops to protect against natural disasters that result in lower yields or crop losses or prevented planting. Next slide. So why should you consider getting federal crop insurance for your farm or ranch? Well, it may help you to stay in business after a bad weather event or low production year. The government subsidizes the premium to make it more affordable and provides financial stability and may improve access to credit. Also, I wanted to let you all know that organically grown crops are covered under the crop insurance program as long as recognized organic farming practices are used. Next slide. Next slide. Okay, sorry about that. Production-based policies ensure against yield losses due to natural causes such as adverse weather, wildlife, insects, and disease. If the harvested plus any appraised production is less than the yield insured, the producer is paid an indemnity based on the difference. Revenue policies provide protection against price decline or increase or a combination of both in addition to yield losses. Projected and harvest prices are used to establish your coverage and to determine whether you have a loss. There is additional premium cost for this added coverage. Next slide. There are 4 phases of the crop insurance cycle each year. The insurance plan, level of coverage, and price are selected when you submit an application. It is important to know the sales closing and cancellation dates. These are deadlines for buying or canceling your policy. There's also a date for reporting how many acres of the crops you plant to determine your premium. You have to provide a notice of loss to start the claim process. RMA may make program changes prior to the next year's contract change date. Next slide. Farmers select their coverage level for crop insurance ranging from 50 to 85% of the yield and 50 to 100% of the price election. The lowest level of coverage is catastrophic insurance, also known as CAT coverage. It covers 50% of yield and 55% of the price election. There is only an administrative fee of $655 in each county per crop for CAT insurance. CAT is similar to FSA's NAP program. Next slide. Now I wanted to talk a little bit about a program that we have called the Whole Farm Revenue Protection. This is available nationwide and it insures all commodities produced on your farm with a few exceptions for forestry and for sport or pet animals. Coverage is based on your allowable revenue determined by your previous federal income tax returns. Specialty and organic crops and livestock are covered. However, there is a $2 million limit for animals and for nursery. Next slide. Whole Farm protects against loss of revenue from all commodities produced on your farm. This includes decline in production, price, or quality from unavoidable natural causes. There are also provisions for replant or if you're unable to plant. Next slide. If your farm is diversified by growing 2 or more commodities, you may qualify for a premium rate discount called a diversification discount. This also reduces the cost of your insurance premium. Next slide. Whole Farm can be purchased alone or with other federal crop insurance policies or NAP from FSA. When Whole Farm is purchased with another crop insurance policy, the Whole Farm premium is reduced due to the coverage provided by the other policy. Next slide. To qualify for Whole Farm, you have to be a U.S. citizen or resident, be eligible to receive federal benefits, file a Schedule F tax form, have 5 consecutive years of federal tax returns, and be in the business of farming. Next slide. If you are a beginning farmer or rancher, you only need 3 years of tax records. To insure for the 2024 crop year, for example, you had to farm in 2023 and have filed Schedule F forms for those 3 prior years. There's also an extra 10% premium subsidy for beginning farmers and ranchers. Next slide. As part of the Whole Farm application, you will need to provide your insurance agent with 5 years of Schedule F tax returns for your farm, a farm plan for the upcoming year with what you will produce, and the expected values and information regarding commodity inventory or accounts receivable and payable. If you don't file a Schedule F, then you must provide your farm tax forms plus supporting information to complete a substitute Schedule F. Next slide. Your revenue coverage is either the average of your 5-year farm tax history or what you intend to produce during the tax year, whichever is lower. This amount is multiplied by the coverage level to determine the insured revenue amount. Claims are settled after your taxes are filed, plus adjustments for inventory sold from previous years or unsold from the current year. Next slide. Now, microfarm is basically a crop provision under whole farm revenue protection, and it has a sales closing date in our region of April 15th for calendar year filers and for early fiscal year filers, and a sales closing date of November 20th for late fiscal year filers. If you meet the eligibility requirements at the sales closing date and you elect to purchase coverage under these microfarm provisions, these provisions will be attached to and made part of the whole farm revenue protection provisions. Next slide. Oh, and just to let you all know, back there on that slide, I do have a little chart there that does show the subsidy, the premium that is, the percentage of the premium that is paid by the government. So you can take a look at that, and that might help you out in determining what you might owe. Next slide. So different from whole farm, under microfarm, there's one single commodity code for all the commodities under the microfarm. Also different from whole farm, the history period is consecutive tax years prior to the policy year with a minimum of 3 years. Microfarm is 50,000 stock or those marketing to local, regional, farm identity, preserved, specialty, or direct markets. Market readiness and post-production operations such as canning, freezing, and processing activities can be included in your allowable revenue and will be used to calculate your farm's insurance guarantee under microfarm. Revenue from sources other than agricultural commodities such as bottled water or souvenir sales must be removed from allowable revenue. Next slide. Again, the amount of farm revenue that you can protect with microfarm is based on the approved revenue of your farm operation, which is the lower of the revenue expected on your current year's farm plan or your whole farm historic average revenue. This represents an insurable revenue amount that can be reasonably expected to be produced on your farm during the insurance period. All commodities produced on the farm are covered under microfarm except for timber, forest, and forest products, and animals for sport, show, or pets. Next slide. Those interested in insuring under microfarm must provide those revenue records to your crop insurance agent for the value of the commodities produced on your farm. Next slide. Individual commodities are not required to have separate expected revenues or expected yields. Consolidated sales records can be used. Again, those 3 years of sales records are required. I'm
so sorry, Anna.
No, it's okay.
That was
Go
my
up
bad.
one. There we go. No, we're
Go.
good. The insured can certify the sales records, but must provide these sales records that comprise a complete marketing record of commodities on the farm operation if requested by their approved insurance provider company. The insured must also certify the total planted acres over the same 3-year period, so an expected value per method of establishment can be calculated. There must also be acceptable verifiable evidence to support the acres certified and may be requested to provide those records. Next slide. The expected value is based on that 3-year average revenue for the farm operation up to 10 years, as long as the operating conditions have not changed on the farm. For example, an increase in land or in new commodities on the farm. Next slide. So again, any other revenue from non-farm operations cannot be used to determine coverage. So this is just a brief overview of microfarm that is listed under the whole farm revenue protection. Next slide. I wanted to point out to everyone that there is a lot of other risk management information on RMA's website. Here you can find an agent by clicking on Tools, circled there in red, and then selecting the agent locator as circled in red right underneath that. Next slide. This screenshot of the RMA website shows where you can get more information that is specific to beginning farmers, right there where it says Get Started under beginning farmers there with the red arrow. Next slide. And then just a few general details for the general BFR benefits. They are available for the beginning farmers, which also include the additional premium subsidy and the exemption from the administrative fee for CAT policies. So with that said, I have my contact information right here. I will also put this in the chat, and then also I have some fact sheets for RMA, for whole farm, for micro farm. So you can have a little bit more information. You can just print those out and get more information from your crop insurance agent. So I thank you very much for your time, and I will now hand this off.
Perfect. Thank you, Anna. I appreciate it. I got really excited about the beginning farmer stuff. I was like, I'm scrolling ahead to it. So I'm sorry.
You're fine.
All right. Perfect. So now, yep, Will's taken over. He's got this all taken care of. I'll hand it off to you, Will. Let you introduce yourself and take it from there. I'm sorry I ate too much time I got excited about FSA stuff. So
Good afternoon, everyone. My name is Will Fett, and I'm the Outreach Coordinator for Oregon Natural Resources Conservation Service. And we do have a number of different programs that are available for beginning, or benefits that are available for beginning farmers. So I'm going to quickly kind of walk through what Natural Resources Conservation Service does. First, we offer technical assistance and financial assistance. That technical assistance is free, so we really encourage you to stop in and meet your district conservationist in your local area to begin planning conservation efforts that can benefit you and your farm operation. But with those, we understand that it might take some financial capital and resources to implement good conservation. So we offer financial assistance programs that you can apply for. Basically, 3 different types of financial assistance programs. The first is a long-term conservation easements, and those could be on a 30-year timeline. So really looking at the long-term sustainability of an agricultural operation. Kind of that mid-tier timeline, if you've done a little bit of conservation but want to do more, is our conservation stewardship program. And those are typically 5-year contracts. And then if you have a very specific resource concern that you know needs to be addressed and you want to our assistance in helping address that, the Environmental Quality Incentives Program might be your best option from a NRCS program standpoint. There's kind of a process that we go through. So it usually starts with planning, talking with your district conservationist, identify that person with the service center locator link that I had put in the chat, filling out an application, determining if you're eligible, and then assuming you are eligible, we would rank the application against other applications that are received. Unfortunately, funding is limited, so we want to prioritize those applications that are going to do the most conservation, and also rank against funding pools that are going to impact either be determined and impact by the local area, or specific groups that we are trying to emphasize and target, like beginning farmers. Finally, we'll be there with you every step of the way through implementation of that conservation practice and help you throughout that entire process. This is a kind of a sequential process, but some of these things can kind of happen at the same time. So we just want to kind of lay it out so you have a good understanding of what to expect when you engage with us. That application is completed by you as the producer, but with the help of the district conservationist. So you've had that conversation of planning for good conservation and really trying to identify which resource concerns you're going to be best to address. There are some deadlines that are associated. We take applications year round, but there are some deadlines that you kind of need to keep in mind. So we will look at all of the applications for EQIP in November. That date is announced usually in October with a November deadline. So we accept applications year round, but make sure you get it in by that November deadline. Today, I'm going to spend a little bit more time talking about the Conservation Stewardship Program, or CSP, because that deadline is actually coming up. March 29th is the deadline for applying for the CSP Conservation Stewardship Program. And that means there's still time if you want to participate in that program. There's still time to take advantage of that yet this year. When we talk about the application, first you have to be an eligible applicant, then you have to have eligible land, and then you have to have an eligible resource concern. And that seems very daunting, but I guess my base advice to all producers would be to go ahead and submit that application, because it doesn't do you any good to self-eliminate. You know, you want to try and go through the process and understand where you might need to either supplement your application, or, as you know, Derek kind of said in his presentation, get some experience or certain steps that you might need to complete before we're able to step alongside you and help with that. So there is applicant eligibility questions that have to be met. And then there are other items like land eligibility. But I really want to emphasize and highlight that there are benefits to historically underserved producers, of which beginning farmers and ranchers fall into that group. So there are higher payment rates. If you engage in a contract with us to implement conservation, those payment rates might be 90% NRCS and 10% producer. So it's a much better payment rate than if you don't qualify for historically underserved. You're also eligible for advance payments, and we put you in a funding group that is going to be specifically addressing either socially disadvantaged or new and beginning farmers, so you have priority of those funding pools. I mentioned land eligibility, and it does have to be producing working land. So that could be a livestock operation, it could be a crop operation, or here in Oregon, there are a lot of timber operations that can take advantage of conservation programs. We work and engage with private landowners and Indian tribes. So we do not work with public lands, except in a couple of scenarios. If you are leasing your land, we can be a partner and implement conservation, with the only caveat that you have the kind of the blessing of the landowner. So that lease agreement becomes part of the application process. And then I mentioned you have to have an eligible resource concern. So at least one resource concern, whether that's water or air or soil or wildlife, whatever resource concern that needs to be addressed, we are targeting that to try and improve it and make that better. Different parts of Oregon have slightly different resource concerns that they're prioritizing and targeting. So some of those are determined by a local working group and implemented as part of a conservation strategic plan. But there are some conservation practices that are available statewide, and those are ones that are specifically tied to climate smart mitigation. And so there's a lot of different conservation practices that fall into that category. And I just really encourage you to, even if it doesn't meet, if it doesn't meet your local needs, you still might be eligible to implement a conservation practice through climate smart mitigation and the IRA funding that was approved in 2022. So there's still opportunities, and it's important to just keep asking questions of your district conservationists, because there are times when it might not seem like you're eligible, or it might not be a good fit, but there are opportunities available. So the Conservation Stewardship Program, that deadline is March 29th, and it's a 5-year contract, most times set up with a minimum of a $4,000 annual payment. There's a couple of different payment scenarios, but what we're basically asking is that if you're already doing conservation, that you maintain that conservation level and improve it, or do a little bit more, a little bit extra. So this might not be the best program for somebody who's just starting out in conservation. Kind of our entry program is that Environmental Quality Incentives Program, but Conservation Stewardship Program, if you've been doing conservation on your own, there could be still some good opportunities here, and would again encourage you to take a look and consider this. It's the same application for CSP and EQIP. So even if it doesn't make sense for CSP, but you still want to go ahead and fill out that application now, you might get put into the EQIP bucket for the November deadline. So again, now is a great time to start that conversation with your district conservationist. What exactly could all this look like? It might be scheduling plantings. It might and managing a cover crop. It might be developing a grazing plan. You might be putting animals on a pasture, but don't really have a plan. A CSP could allow you to really develop a good grazing plan and improve the forages that are there. Better forages means better healthy animals. Or it could be looking at the farm more holistically and doing some no-till and managing your erosion. There's lots of different opportunities here. We have a field operating tech guide that has literally hundreds of conservation practices and scenarios for almost any different type of production operation. And so there's a lot of opportunity here for you to consider. Soil health, nitrogen management, livestock, grazing, agroforestry. These are all categories that fall under that climate smart mitigation, which a lot of times are a little bit of a step up from our base level EQIP conservation practice. So again, lots of opportunities. Here's a list of our ranking and our funding pools. And again, know that some of these are locally determined, but some of them are available statewide. When it comes to implementation, like I said, that it typically happens during the growing season. So after the EQIP deadline in November or the CSP deadline in March, we would help you implement that conservation practice through the growing season. Typical cost share is 70 to 85%. But again, with historically underserved groups like beginning farmers, that cost share is closer to 90%. EQIP is a 1 to 3 year contract. CSP is a 5-year contract. And again, those benefits are available to historically underserved. So we're at the 5:05 mark, and I'm going to ultimately break us in, or add some breakout rooms. And so you can admit yourself into one of those breakout rooms as at your choosing, and ask questions specifically to RMA, FSA, or NRCS. So I'm going to stop sharing.
Thank you, Will. And before you do that, I'm going to jump into the chat here. One of the things that Will pointed out to me before the meetings too is you've heard us all talk about veterans and how we like to work with veterans, beginnings, and farmers. And sometimes it's tough to get that information. So here is an event. And this is coming on January 22nd. It's a free event. You guys are free to, each and every one of you is free to join, to jump in and talk to the Boots to Business entrepreneurial training folks, to get a little bit more information on how to start this and where you need to go when you do start. Again, Boots to Business is a great platform for veterans to really get started in their farming endeavors, whatever they may be doing. But again, thank you, Will, and I'm sorry for taking so much of your time. I I just got too excited. You know how I do it. One other thing too, Will, before we jump into the breakout sessions, Nate actually had a really good question here. He asked, "What do you mean by conservation?" And mentioned that any land that was put into conservation reduces lands for crops. I tried my best to kind of say, well, not really, because there's certain things that we can do to lessen our impact on the land. But kind of for the good of the group here, can you kind of go into that, and then we can jump into the breakout sessions, and I'll shut up.
Of course. So conservation really means doing agricultural production, livestock, crops, forests in a sustainable way. When it's livestock, a lot of times we're talking about improving forage and grazing those animals in a way that makes the most sense. And in the case of crops, we're talking about reducing soil erosion. So adding buffer strips is one option, but doing no-till is another option. There's a lot of different scenarios, so it's hard for me to kind of sum up, but no, we're not taking land out of production. We're trying to do it in a very sustainable way.
Brilliant. Couldn't have said it better myself. In fact, I couldn't say it because you guys know all that stuff. Okay. Again, thank you all for joining us. We're going to go into the breakout sessions like Will said. If you have any questions, jump into the room, talk to your person, and we will go for there. I'm going to jump into my room and see what we can do.